Hey folks, Dan Ferrio here with your YouTube/podcast for today, which is Thursday. What is today? May 4th. So it's already May 4th. Oh, tomorrow is Cinco de Mayo. Okay, so what I want to talk about today is kind of what the mainstream media does. Squirrel. Okay, so it's going to be talking about the banking system today and how they squirrel. How the media, you get what I'm doing there? How the media kind of diverts your attention to things that they really want you to follow because they really have nothing else to talk about. So in today's video, we're going to debunk or kind of give you at least some context of what in the world's going on with the banking system, and then how that is affecting the real estate market, home affordability, and mortgage rates. Because here at my channel, I'm a mortgage advisor. So if you're out there and you need help getting pre-approved, maybe refinancing a reverse mortgage, or just kicking the tires, do I qualify for anything? We'd love to help you. And you can schedule a consultation right down below. We do one-on-one consultations with you guys that I don't really know anybody else that does those. So without further ado, let's get over to the economic calendar for today to figure out what news came in. So yesterday we had a slew of information. Look at yesterday, which was Wednesday. We have ADP numbers that came in. They missed the mark by over a half. Then we have the servicing sector that came in, and its servicing's holding up. Crude oil inventories, it's all over the map. And then we had the Federal Reserve came in, and they came in and they raised rates, which you're seeing right here from 5 to 5.25. We all knew that was going on. What news came in today? Well, initial jobless claims. Well, these numbers are going to have to start ticking up if the Federal Reserve's goals are working for them, meaning they want to push us into, and they're saying no, but they want to push us into a recession. So the unemployment numbers go up, people lose their jobs, and then they can't spend as much. And that'll drive down the demand for supplies and goods. Okay, so that's the whole context here. But what I want to talk about today is the banking system. You see, here's the news, squirrel. Okay, here's the news. First Horizon Banks plummets. First Horizon Bank stumbles. PacWest tumbles. PacWest plummets. Okay, so you're seeing, oh my God, and you're having people saying, well, the world is ending, folks. This is going to be a collapse of the whole banking system like 2008, because that's what happened in 2008. Same thing with housing. Well, no, not necessarily. What happened over the past year and a half is the Federal Reserve raised rates 10 times, and they took the federal funds rate from 0 to 5%. That's a huge move, okay? Huge move. So here's why people are basically moving their money out of the banks. This is plain and simple. Here's the returns people are getting right now on their savings accounts. So you look right here, interest rates for checking and savings. Okay, this is pretty darn simple. We got Chase paying 0.01, Huntington Bank paying 0.01, TD Bank paying 0.01, PNC Bank paying 0.01. You get my drift? Okay. Well, I thought the Federal Reserve raised rates tremendously. Where can I put my money and get decent yields instead of 0.01? Well, it's pretty simple. You could just move to a CD and get multiples of that. Look, if you went to Best Bank, Basic Bank, 4.85 on a CD from 0.01. Okay, I just did this with my mother. She had a substantial amount of money from my father's death. It was sitting in a savings account, basically, and it was 6 figures, sitting in a savings account of 0.01. I moved it to a 15-month CD, paying 4.75%. Right through here. Why in the world would I keep my money there if I can get these returns with no risk? Okay, the stock market, I would love getting this in the market right now. Okay, so I moved a huge portion of my cash position that I have in investments, in my investment account, over to a money market account that's yielding 4.8% instead of sticking it in a savings account at 0.01. That's why people are moving their money from savings and checking to CDs. So they're not really moving, they're not running out of money, they're not losing their money. They're moving it from the small banks that have, basically minuscule returns, and they're putting them into these banks that have, CD rates at 4 times the amount that they're paying on savings accounts. That's what's going on, folks. So they're moving their investments. That's why there's a flow out of money. Now, the other piece of the equation I've been teaching you guys for the past month or two is what is happening to all the reserves that the banks are holding in treasuries. Well, the treasuries, every time the Federal Reserve raises rates, the treasuries that these banks are holding for securities, for reserves, are depleting in value. So if they had a run on the bank, which usually banks never do, very rarely, if they have a run on the bank, well, these banks are going to have to cash in their treasuries at a loss to have enough cash to fill all the people coming to the bank to take their money out. So that's what's going on. So the banks are going to have to figure out something here, and the Federal Reserve is going to have to stop. And I think yesterday, a lot of the connotation that Federal Reserve Powell said was basically our goal at the beginning was to push the federal funds rate to 5 to 5.25. Okay, well, where is it now? Well, it's 5. Here, hold on. It's 5 to 5.25. You can see that right in here. Okay, over here in this chart. So this is what we follow at the Chicago Mercantile Exchange. This is telling us what the futures market is expecting the federal funds rate to be. Well, they said in May, the federal funds rate would go from 4.75 to 5 to 5.25. That happened. Now there's almost 100% chance it's going to stick there in June, and then all the bets are off. And then they're saying, well, there's probably a chance that they're going to turn and start reducing rates in the September meeting. So that is the report today. I know I'm trying to do these as fast as I can for you guys because I don't want to bore you for 10 or 15 minutes on all this stuff. So if you'd like to learn more about this and learn about, how much can you qualify and so forth, please reach out to us or check us out at therateupdate.com. But if you want to check out rates, this is what we do. I post Mortgage News Daily's rate sheets every morning to give you guys at least a guide on what the heck mortgage rates are doing. Because I talk to customers every day, and some don't even know that rates are, in the sixes. I talked to a former borrower of mine that I helped buy a house about 5-6 years ago, and he's like, "Hey, I'm looking to buy an investment property. What are rates?" And I said, "Probably on investment property about 7." He's like, "You got to be kidding me!" I'm like, "No, that's where they are." So if you'd like to find out more about, what you would qualify for, all you need to do is reach us at therateupdate.com, which is right here. You can apply online. You can give us a call right up here, 844-775-5626, or you can even schedule a consultation, and you can do that down below in the description below. God bless, guys. Thank you so much for watching, but I hope you found information about this to debunk a lot of the headlines that mainstream media has for you. So without further ado, all I ask you to do is give us a thumbs up, subscribe down below, squirrel, and click the bell. Every time I post video, you get an alert. God bless, guys. See you next time. Bye-bye.